Welcome back to Spotlight Television. I'm Damon Roberts. Despite the value locked up in luxury assets, many wealth managers don't discuss luxury asset lending as a liquidity option with their clients. Luxury asset financing has become a booming industry thanks to the increasing value of luxury assets. As prices for luxury goods climbs, business owners, CEOs, and high net worth individuals are looking to fund new ventures without having to sell their prized possessions. Interest rates are climbing, and the standard lending criteria among conventional bridging firms has tightened, making luxury asset lending more attractive than ever. Investors looking to seize new investment opportunities are turning to this discreet, rapid route to liquidity. Today, we are going to talk with one of the top luxury asset specialists in the world and find out how they unlock the equity in their clients' high-value luxury items to secure confidential loans. He is the founder and chief executive officer of Luxury Asset Capital, the leader in alternative financing. Welcome, Dewey Burke, to Spotlight Television. Dewey, welcome to the show.
Damon, thank you for having me.
It's great to have you. Tell the audience, I always like to start, tell the audience a little bit about yourself, and then tell us how you got into this model for luxury asset capital.
Sure. Yeah, career in finance. In a past life, I worked for a private equity firm, and we were always calling on different entrepreneurs to see if they could take an investment in their business. And what I kept hearing from them, particularly when they talked about their early days, was how hard it was for them to access credit. And I kept thinking to myself, there's got to be an easier path than just traditional banks and traditional financing for some of these high net worths to unlock some liquidity. And a lot of these guys we talked to had a win or two in their career. They'd sold a business and done well, and now they were going back to try again with a different venture. And without fail, they all talked about how hard it was to get credit. And so that's what sparked it. And then as I investigated and kind of looked at the marketplace, I realized there wasn't really a true leader in helping high net worths leverage their luxury assets. And so we started it in 2016, and here we are 7 years later, and we've had a pretty good run.
Yeah, I think most people don't realize, especially when they hear their politicians and people saying, you need to pay your fair share when they talk about taxes. I don't think people realize how much high net worth individuals rely a lot on debt to live. They're not earning necessarily like the rest of us do. They rely on debt and to loan against those assets a lot.
That's exactly right. And I think a key point there, especially for the entrepreneur, is they have choppy liquidity. They don't necessarily just have a steady paycheck where they're sending a W-2 to their accountant to do their taxes. More than likely, they're an owner of several businesses. They have a piece of that and a piece of this, and then they founded that business, and they have some of these real estate holdings, and so they don't always know when liquidity's coming. And so when an opportunity comes up, and we're going to get into our business model, when an opportunity comes up and they need liquidity now, we can be a great resource just because of how fast we can go.
Yeah. So let's give the audience a little idea of the size of the market that you guys are playing in. How much money have you guys lent so far?
Yeah, north of $1 billion. So we've put a lot of money out, and that's across all of our offices and all of our different platforms. We have an online platform, Borrow.com, BORRO.com, which has been a great brand for us, as well as our 3 offices, Los Angeles, Denver, and New York. So we do by appointment, we do over the internet. We pretty much can help you with whatever media you're comfortable with communicating. We try to tell our sales team that when we get an inbound lead, which is typically a form fill, we expect the client to hear from us in under 5 minutes. And that's how we start the service offering. And so we feel like, and it's not automated, right? It's a human. It's not an automated text message or a bot. It's us. And we feel like that first touch, being white glove, sets the stage for a really good service experience. And so we try to work really quickly in providing our potential client or repeat client with an offer of what they could potentially borrow as they think about the deal they're working on or the deadline they have to meet. When it comes to the liquidity need, we can usually help.
So you talk about that first touch. Let's talk about people looking at you for the first time. Is there one aspect, or what would you call maybe the greatest aspect of luxury asset lending that you want people to kind of know about you first when they first start to look at you?
Yeah, that's a great question. Definitely speed. We typically can close in 1 to 2 business days, and we have some use cases where we've gone even faster than that, some same-day deals that we've been able to get closed for clients when they really had a liquidity need. We are not like banks in the sense that there's not a credit check, a deep background check. There's not a lot of regulatory compliance. We really focus on the asset or the assets that the client is putting up for collateral. And as long as those assets are unencumbered, no liens on them, they're held free and clear, and the title is with the borrower. As long as we get comfortable with the value, and we can talk about how we do that, we can move really fast. Things like cars or art maybe take an extra day because they're titled assets, and moving them is not quite as easy. But for luxury assets like handbags and high-end watches, jewelry, diamonds, we can move extremely fast. And so when people get to us, typically the need is right now. If they wanted to get a home equity line of credit or get a margin loan against their securities portfolio, that might take 6-8 weeks. And if they have 6-8 weeks, then go do that. But if the liquidity need is right now, here we are talking on a Monday, somebody needs to close something on a Wednesday, we're a great bet for that.
So I want to get into your process. I also want to get into right now, obviously, the landscape of credit and money, the cost of money. I'm interested to get into that. But let's talk about who the client is. Who is the typical client coming to you? Who are they? And what is the typical situation that they come to you in?
Yeah, so we've said the term high net worth several times since we started talking, and that is usually our client. It's somebody who is fairly well-to-do and is an owner of the luxury assets we're talking about. So fine art, collector and luxury cars, Rolex, Audemars, Patek watches, diamonds, jewelry that their wife may have, and then high-end handbags. So they've been successful at a point in life, and now they're looking to leverage assets that the banks just won't be able to understand on their personal balance sheet, right? So you think about a traditional financing process. You go to a banker and you submit financials and you submit tax returns, and they put together a personal financial statement. And on there, on the asset side, is, hey, I have $1 million in cars and I have $2 million in art. Well, banks are very fond of saying, we don't know what we don't know. And so that stuff's just flat not for us. They're going to focus on real estate. They're going to focus on securities portfolios when they're thinking about leverage. And so we've built a business thinking about exactly what the banks won't think about. And we've become experts in those different asset classes. And so we can very quickly tell you what we think your asset is worth and how comfortable we are from a loan-to-value perspective to get you as close to your liquidity need as we can.
Right. So that and that you kind of lay out, that's the typical situation that they come to. They've got the assets, but the bank's just not going to deal with it in the way you guys would treat it with the speed that you guys can do it. So there's your typical situation. All right, so we've touched on a lot of things, but let's get into the crux of it. Explain how the process works for someone who gets in touch with you guys for the first time.
Sure, and you mentioned their situation. So what are we financing typically when we write a loan for a client? We've talked about a business venture or a real estate opportunity. We see that a lot. Meeting a deadline, whether that's college tuition or an IRS bill that might be due. And then one of the biggest subsets of our client base are collectors. So this is someone that perhaps owns X number of Ferraris or Porsches, and there's another one that's become available that they desperately seek, and they need to act now. Well, they can leverage their existing portfolio to add to it, right? They borrow against this Porsche to buy that one. So we see a lot of that. And then as far as the process goes, most clients find us either online or by a referral, typically from a service provider. So we're talking about CPAs, estate planning attorneys, investment bankers, people that are close to deal flow. Oftentimes will refer clients to us as a last slug of liquidity for whatever deal they're working on. From there, it's, again, very focused on the assets. So we're going to want pictures, makes, models, serial numbers. In the case of a car, copy of the title. If it's art, all the auction provenance, the history of the piece. And then we're going to go to work on our diligence. We can handle a lot of those appraisals in-house. We've got 8 appraisers across our 3 offices with various disciplines and education backgrounds. And then if we have to go third party for that appraisal or valuation process, we will. Great relationships with Sotheby's, Christie's, Phillips, all the major auction houses, as well as some private institutions that focus on the different asset classes where we do business. So we have a network of people that can help us with valuation. And those auction houses, they want to work with us. Because they know that we're talking to the client that they also want to be talking to. So we have a great working relationship with all those houses that I mentioned. So we're very confident in our ability to evaluate. And so once we get that value, we're going to give you anywhere between 50 to 70% of what we think it's worth. And that'll be our loan offer. And pretty quickly, once we have possession of the asset, we can send you the loan contract. It's all electronic via DocuSign. You execute, and we send you a wire.
So let's talk about the actual assets. You kind of touched on it before, but what are the assets? Are there assets that you're most comfortable with that you say, okay, if you have this, we can move really quickly? Are there most commonly used assets of people? What's the percentage of people who come to you with real estate? Kind of break down those percentages of what the most common things you see, and what are you most comfortable with seeing where you've done your due diligence and you're most comfortable with?
Sure. Our largest category is luxury watches.
Luxury watches.
It is, yep. And we've really carved out a nice niche for ourselves as we think the preeminent luxury watch lender anywhere. So we see a lot of watches, jewelry and diamonds for sure. And those are easier just because they're smaller, right? So here we are in New York. If we have a client in Massachusetts or in South Carolina, rather than them having to come to us, they can FedEx or private courier their assets to us, and then we can do our valuation and then send them a loan contract and close. The larger assets, like we talked about, art and cars, take a little bit more time, but our car portfolio is exploding right now, which is something we're really excited about, especially out in Los Angeles, which tracks. Our office is in Beverly Hills, and so we've done some really smart marketing there, and so our luxury car portfolio is growing. And I don't have the striation exactly by asset class. We do have a nice chunk of luxury real estate also. So it's fairly spread evenly, I would say, but definitely our top asset class is luxury watches.
And I would assume that you have a range of lending that you want to stay within, or is it strictly going by what you think the loan to value is, or the debt, whatever the ratio is going to be of what you're going to lend against the assets? Is there a cap that you guys say, okay, we're only comfortable going to X, or does it strictly just rely on the assets they bring to you?
We do have a cap, but it does vary by asset class. So for example, if we're looking at a Rolex Skydweller, right, we know very clearly what that watch is worth, and we can sell that watch in a day. So we know what it's worth. And so we can be a little bit more aggressive, maybe up to 75% on a piece like that. Whereas when you're looking at a rare collector car, where we had to get maybe two opinions on the value, we're going to be a little more conservative, maybe closer to 50% of what we believe the value is, just so we're being smart in case there's a market adjustment on a rare collector car. And then you also have to factor in the higher the loan amount, we're probably going to be a little bit more conservative. So you're talking about loaning somebody a couple $1 million. We're going to be a little bit more conservative than if we're loaning somebody $25,000. So it's asset specific, and then it is borrower specific, but in the sense of, are they a repeat client? Do they have a history with us where they've always paid on time and paid their loans off? One of the things that we really like to talk about, and a lot of our clients take advantage of, is what we call a luxury line of credit. And so if you are, let's say you own 3 Ferraris that are worth, in our eyes, $1 million. You know that with us, you have a $500,000 to $600,000 line of credit anytime you need it. We just have to collect the cars, put them in storage at a luxury car garage. You give us the keys and the title. You have access to $600,000. Just
to use when they want, almost like a HELOC.
Just like a HELOC, that's what I was about to say. You took the words out of my mouth. So it functions like a HELOC. And so one of the things we're most proud of is we have a 71% repeat business rate. So clients that use us, 71% of them use us again. And the reason is now they know they have a defined value for that asset, and they know how much they can borrow. So in my Ferrari example, if we have all 3 of them, that client could draw down $200,000, go do what he or she needs to do, pay it back, revolve it back to 0 like a HELOC. They may take it all the way up to $600,000, right? And then do a principal payment down to $300. Literally, they revolve it just like you would a HELOC. And the difference is that the asset is not a piece of property, it's 3 cars that we have in storage. So that luxury line of credit is a concept that we came up with and really rings true to the sophisticated borrower. They understand that concept. And so we have lots of clients today that have a balance of 0, but their assets are with us so that they know they can call or text me or somebody on my staff and say, hey, can I draw 100 grand? And they have it in 30 minutes.
So as I'm listening to you, I'm thinking about the current landscape out there of money. You think about 2.5 years ago, interest rates were effectively 0. Inflation was non-existent. Most people didn't know what the term is. And now you look, inflation peaked at 9.2%, it's come back a little. The Fed has raised rates 550 basis points. I can't figure out listening to you if you're in the toughest scenario for your business or the best scenario for your business. So what is the landscape right now?
It's the best scenario for us. And you made reference to rates going up, but it's not just rates going up. It's also banks tightening access to credit. It's not just that it's more expensive, it's also harder to borrow. We have plenty of lenders in our network that refer deals to us that have flat out said, this is a guy or this is a gal that we would have normally been able to come up with a transaction for, and we've tightened the rein, we pulled the reins in. And so this is a great time for us in our business. But our rates and what we charge are not tied to the Fed rates. So we're licensed and regulated, and we have very straightforward rates that we charge. So because rates have gone up 550 basis points, doesn't mean that ours have tracked with that. So actually, we're more affordable now than we've ever been.
Okay, so I was going to ask you, how do your rates compare with, let's say, a bank right now?
Sure, yeah, definitely more expensive, but we're meant to be short term. All right, so borrowers that get a luxury line of credit like we talked about, or just a straight asset loan, typically borrow from us maximum 8 months, but more like 4 to 6. So even if we're charging, say, 2% a month on a 4-month loan, cash on cash, that's 8% of your principal amount, which is what you're going to pay on an annualized basis, roughly, from the banks right now. And you're going to pay me that in 4 months. But what's the opportunity cost of not doing the deal that you needed to get done? And so when we talk to clients in that vein, through that lens, they understand it. You borrow 100 grand, costs you 2 grand a month for 4 months. The whole deal costs you 8 grand. You took that 100, you closed the real estate deal you were doing or whatever venture you needed to put up capital for. What is that going to turn into? And we always say when clients, if they do push back on rate, we say, well, you don't have to do it. We're fine. You know, this is what we cost. Right. We're extremely fast. We're extremely easy. We're going to take great care of you and your stuff. If you feel like it's too expensive, no problem. But we've never been more affordable, and there's definitely way more expensive capital out there, given rates going up than what we used to compete with.
And I think you nailed it when you say they can figure out what the opportunity cost is when you weigh everything involved with speed, access, opportunity cost. Seems like it's a pretty easy decision. So let's talk about a couple of and we've kind of laid out the clients and the situations, but give the viewers a few examples of maybe the things you can think of in the last couple of years where you guys, how clients have used your service in ways where, it was really memorable for you, that they were really in a bind or they had a really huge deal and they just couldn't get that liquidity they needed to come to you. Give me some of the best examples you can remember.
Easily the best one, and I can't use names and you'll see why, but easily the best one is we had a very, very prominent guitarist from one of the most popular 80s rock bands that all of us know. And it was during COVID, and he came to us and he said, look, we can't tour, but I need to keep paying our road family. All the guys that are with us when we travel, that set up the stage, break down the equipment, the lights and everything, said, we want to keep paying them, but we don't have access to liquidity. Banks won't give us anything because they're unsure when we're going back out on the road. Is there anything you can do for us? Well, they had literally hundreds of guitars from this legendary band that we were able to partner with an auction house, go and value. It ended up being, I think, 170 guitars, giving them a couple $1 million so that they could keep their road family paid and going during COVID. And then once they started touring again, boom, they paid us back, guitars back to them, and off they went. So that's a really cool story of a way we could help in a super unique situation. I can't think of many lenders they could have figured out a way to help someone leverage 170 something guitars so that they could have access to that liquidity to keep making payroll. So that's a great story, one we always talk about a lot. The more traditional deals, we do help fund a lot of real estate. A memorable one was a client locally in our Denver office who's a franchisee for Chick-fil-A and had the opportunity to buy a couple more units to expand his portfolio, but the sale was happening right now. The seller had gotten into a pinch for these other 2 Chick-fil-A units, and he had to come up with $600,000, and it was like, we're closing in 8 days. What do I do? The banks can't do it. And we were able to leverage actually across a couple asset classes, cars, art, and watches for that gentleman so that he could acquire those 2 Chick-fil-A units.
Now, could you have leveraged the actual first business that he was already in, or
It's a great question. We're not licensed to do that. We have to focus on physical assets that you can take possession of, other than real estate, of course. So we do get that question a lot. Can you give me an operating line of credit against the business or the EBITDA of our performance? Also get asked if we can help leverage private stock in companies. We don't do any of that. We stick to what we know, which is those personal luxury assets.
Is there one aspect, or what would you call maybe the greatest aspect of luxury asset lending that you want people to kind of know about you first when they first start to look at you?
Yeah, it's a great question. Definitely speed. We typically can close in 1 to 2 business days, and we have some use cases where we've gone even faster than that, some same-day deals that we've been able to get closed for clients when they really had a liquidity need. We are not like banks in the sense that there's not a credit check, a deep background check. There's not a lot of regulatory compliance. We really focus on the asset or the assets that the client is putting up for collateral. And as long as those assets are unencumbered, no liens on them, they're held free and clear, and the title is with the borrower. As long as we get comfortable with the value, and we can talk about how we do that, we can move really fast. Things like cars or art maybe take an extra day because they're titled assets, and moving them is not quite as easy. But for luxury assets like handbags and high-end watches, jewelry, diamonds, we can move extremely fast. And so when people get to us, typically the need is right now. If they wanted to get a home equity line of credit or get a margin loan against their securities portfolio, that might take 6-8 weeks. And if they have 6-8 weeks, then go do that. But if the liquidity need is right now, here we are talking on a Monday, somebody needs to close something on a Wednesday, we're a great bet for that.
Getting back to the great story about the guitars and the band and the COVID, I'm just thinking about the timeline. Are there situations, and hopefully we never see a situation like COVID again where we're locked down and things like that, but are there certain deals or situations that come up where your timeline maybe has to be more than 4 to 6 months, and you guys have entertained something that could be 12 months, 24 months, or is that just very not atypical?
It's pretty rare, but it does happen. We do have clients that say, hey, look, I think it's realistically going to take me 18 months to pay this off. And so we can set up an amortization schedule where they're paying principal and interest every month, so they're whittling away at the balance with a bullet or a balloon at the end, as they say. So we do see that. It is atypical. We advertise as such and tell our clients as such. Only come to us if you have a short-term need. We get expensive when you're talking about 12, 18, 24 months. There are situations where we have helped and the deals have lasted that long, but more often it's that 4 to 6 months or less, and then they're happy with their experience. A lot of times keep the assets with us and then revolve it like that line of credit concept as we've discussed.
Wow, amazing. Just an amazing business. Especially at such an interesting time, like you said, with feds and rates and interest and inflation and things like that. It's a good time to be in the luxury asset lending collateralization business. So, Dewey, it's been a great conversation. Let's do the most important thing we can do. How do people find you? People may be looking, go, man, this is what I've been looking for. How do they get in touch with you? Let everybody know where they can find you guys.
Yeah, absolutely. Thank you for having me. Great conversation. Best and easiest, everybody likes to have a website. Borrow.com, www.borro.com. So no W, just borro.com. You'll find us there. Read about us. You can see our whole team. Everybody's pictures up there. we're not hiding from anything. We're all there. It's a bunch of smiling faces ready to help. And go ahead and fill out that form. Tell us about your assets, and you should hear from my team in about 5 minutes.
Under 5 minutes.
We better.
There you go. Dewey, thanks for being on Spotlight Television.
Thank you.